Hi, I'm Tom Hoskins, editor of Mining Journal, and I'm here with Alex Sukanek, who's CEO and one of the co-founders of Nova Royalty, which is a royalty and streaming company focusing on metals central to the transition, mainly copper and some nickel as well. Hi, Alex. Thanks very much for joining us.
Thank you very much. It's great to be here, Tom.
Excellent. So let's kick off with a question around, I guess, royalties. They're traditionally seen as a precious metals play. Why did you decide to buck the trend?
Well, you're right. It has been traditionally a precious metals business, and there have been some phenomenal companies that have been founded and grown in that business. We started Nova in 2018, and the idea was really simple, kind of where we saw things heading. You were going to have a new energy supply chain. And so you're transitioning from sort of oil and gas to a world where copper is really a strategic commodity, which is really going to be unique and central to everything that happens. So we felt it was the right time to start a copper royalty company.
So why is a royalty company, in your view, the best way to play, the energy transition compared to, let's say, a copper junior?
Well, I don't know if you've noticed, but mining is a risky business. And so what we wanted to do was create an instrument for investors that was going to combine the quality of assets owned by and operated by some of the best companies out there who really have the wherewithal to make these things work. And if you look at the copper business, it's very top heavy. Pretty much, the overwhelming majority of production comes from these mega mines that the majors operate, but also take a lot of the risk out of it, and so the royalty gives you some percentage of revenues life of mine without any further capital commitments. And that's really, I find, an astounding way to participate in the sector, because you get all the benefits of all that work and the capital, the effort, the asset expansions, and that all accrues to the royalty holder. So we really felt that this was the way that we wanted to do it. And the only way you can do it, really, to start with, is you're buying third-party royalties. You're not going to walk into BHP or Rio or First Quantum and get a royalty today. So we found all the royalty holders who received these royalties as a part of selling the assets to the majors some 20, 30, 40 years ago. So you're really looking for families in Argentina and Chile and Canada and Australia and US. So it's very much of an in-person business, and being able to connect with people and really make them feel that you're operating in good faith and you're looking to acquire the royalty for a fair price. And so so far we've been very successful at that. We've done 7 deals in the last 11 months, I think 10 in total. And so we've been fortunate to get very good investor support.
So, you've done a lot of deals, as you say, in the last year. Do you feel like people are wising up and that you're not going to be the only kind of game in town?
We never really looked at it that way. We have a team which has really good local relationships, and we've simply treated people, I think, in a way that we'd want to be treated. So we never really thought about anything else. And I think that's just how we go about it. We're very focused on this sector. We really don't have any interest in other commodities outside of copper and some strategic nickel deposits. So this is all we do. And so for people who've been receptive, nothing else really enters my mind, to be honest.
Yeah. And I'm just interested in the funding of these projects. It seems like there's a lot of money coming into the sector, and we're seeing, a lot of junior share prices going through the roof. But in terms of a lot of these projects getting built, clearly there's going to be a huge amount of capital required. What kind of role do you think do you think royalty and streaming will play in financing these metals central to the energy transition?
If you look at, say, the precious metals sector, you've seen a dramatic transformation where royalty and streaming now accounts for, I would say, probably 30+% of the capital raised by the sector for the major builds. Base metals are, I think, later in that evolution, much earlier, kind of overall. But when you think about it, a royalty, I think, is just a much easier instrument for an investor to understand. If a project wants to get built, you get some percentage of the revenues in exchange for your capital. You have access to the asset expansion. You have access to the implied inflation protection from the commodity price exposure. In many ways, it's much easier than equity, because equity really is at the parent level. You're subject to a lot of non-asset specific risks. And so I think in many ways, it's a more difficult instrument. I don't know if you look at what's happening right now, a lot of the big equity investors are really demanding that the large mining companies take all the excess cash flow and pay it back in dividends. I don't think you're seeing a lot of capital for the build. So eventually the industry is going to have to do something to bring in new capacity online. And our belief is that the royalty and stream financing will play a much more central role in this next cycle than it did before.
So, and what are you looking for in new portfolio additions?
Quality. That's the biggest thing. I mean, if you look at what we've done, it's really some of the best projects out there with Taca Taca, Nova Union, Westwall, with Vizcachitas, etc. Base metals are very top heavy. And so you need to make sure that the asset is quality enough and hopefully already has an operator in place that can actually make it work. Because again, copper, if you look at global production, I think at least 2/3 is produced by mines making at least 100,000 tons a year or more of copper. There's actually not that many mines in Australia and Canada, for instance, that can fill that role. I think there's 2 in Australia and 1 in Canada on that basis. You see a lot of them obviously in South America, but we've been very careful about asset selection because it's a very risky business, and you really want to be the top end where you have some clear direction from a major operator, like say First Quantum with Taca Taca, which we own, which wants to take it into production, or something that's clearly in that same bucket. So we've been very careful with that. We actually just bought a cash flowing royalty on an excellent mid-sized copper mine called Aranzazu in Mexico, which is operated by Ora Minerals. And that's really a great case study of a mid-sized copper mine doing extraordinarily well. So you absolutely will remain open-minded, but irrespective of whether they're large or those really, really great mid-sizes, you have to be very careful about underwriting because copper is so capital intensive and so technically complex and financially demanding that a lot of companies just aren't able to really execute on these things.
How are you placed cash-wise to finance new deals?
We're well supported. I mean, we've got about $3 million in the balance sheet right now. We're self-sustaining with the cash flow royalty we have from a G&A perspective. We have another $20 million available on the credit facility from BD Capital, our biggest shareholder, who've been super supportive since the very early days for us. And we've had very good investor support. I mean, we just did our financing last month to finance the acquisition of Aranzazu. It was great to get the equity market support from our current shareholders. And I think now as we go through and really explain to people that this is in always in many ways the simplest way to invest in copper, given that it's a sort of rapidly diversifying portfolio of high quality royalties in both near, midterm, and long term. I think more and more people will catch on to the story for sure.
Fantastic. Okay, well, that's pretty much all we have time for today. So we're going to wrap things up there today. But thanks very much indeed for joining us, Alex.
It's great to be here, and thank you very much for your time.
Not at all. Okay, well, that concludes this video. We'll see you again next time. Bye-bye.
Thank you.